How you doing? Of course, Brad Connors. Just want to touch base with you. I've had a couple inquiries about the bank that went broke last week in California and another one in New York, and what does that mean to my portfolio and things like that. So I just want to take a little bit of time and explain that situation. I always debate on whether sending these or not because I'm not panicked, but I don't want our clients to be panicked, but I also want you to be informed. So here's what happens when you're a bank. You have to, as depositors put money in the bank, you have to take those monies and invest them. And you can't be risky. It's not like you and I that can buy stocks and mutual funds and all these things. Like, they're regulated on what they can buy. Most of the time, they buy government bonds. And so they invest in government bonds. It's safe. Well, we all know last year that the aggregate bond index was down over 13%. So they had a lot of deposits come in. They invested in government bonds. And then the Fed raised interest rates to fight inflation. And all of a sudden, their bonds were worth less than what they put into it. Just like our portfolios, if we had to sell our bonds today, they're worth less than they were a year ago. And so what happened was all of a sudden there was a run on the bank. People started to move deposits, and they had to come up with cash to take care of the money that was leaving the bank. And so they had to sell those bonds as they were lower in order to be able to pay those people off. And so that's where the Fed had to stop in and basically has backstopped it and said, we're going to take care of all depositors that are in there. You know, there's FDIC insurance and things like that, but they're going to make sure everybody's whole. So the bottom line is those people that were in that bank and had money, they're safe. It's going to be there. The Fed's taking care of them. That's a debate for another time down the road. But that's what happened. And so this morning you wake up and you see Credit Suisse, which already had issues overseas. Now they're having some issues. So this is going to be a systemic risk a little bit to the markets. But here's what happens. We have a portfolio manager that I trust dearly that's been talking to us for 9 months at iWell saying, listen, these things typically end when something breaks. Fed raises, something breaks, and then they're going to pause. And so we've seen that happen. I believe this is a big enough event to have the Fed pause at some point. Maybe they go up another quarter, but the futures this morning already have, with CPI data coming out, that's lowering expectations. They actually have some cuts built into the end of this year. I don't know if that's going to happen or not, but here's what I do believe. This is not the 1970s over again. Inflation is coming down. This breakage that happened with the banks is going to be a catalyst that's going to help this market settle out sometime, maybe this summer, and start to bounce back up. Here's what your responsibility is. It's to think rationally. It's to reach out to your financial advisor or us and ask questions on how this affects you if you think it affects you negatively. But the other thing to keep in mind is that the news is there to sell you that 1 minute clip. So turn off the news, turn it down a little bit, walk away a little bit from the news because they're just trying to gather your information today. And then the other thing is just make sure that you understand in your life what's changed. That's the question. Like, did you brush your teeth this morning? Are you going to go fill up with gas? Are you going to get groceries later this afternoon? Like, the world's still moving around. We're still doing things. This is a catalyst in the market. These events happen. It's not different. And we just need to make sure that we keep some perspective. So I hope that helps. I hope that gives you a little bit of background. I actually think this is an opportunity for people that are opportunistic and want to put money into work long term. I think it's a great time to be in the market. For others, I think it's a time just to take a pause and just let things settle out and watch these markets as we go forward. So if you have any questions, reach out. Hope this helps. Feel free to share it with anybody you want as well. And have a great day.